Today, the market went absolutely nowhere after FOMC minutes, and we're still sitting at very critical support levels. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was down 0.14%, and we can see SPY did get the second day in a row of the close down below 400, which does increase the probability we could be coming down for this next leg lower at 393, and that is going to be a double support between a retest of the breakout of the bear market resistance and the 200 daily moving average. Now keep in mind, these Bollinger Bands need to expand to allow price to go that much lower, so there is a very good chance in the short term we need to go higher before we go any lower. So do not rule out the possibility that we could get a bounce in the short term before we go reach that level at 393. Now there is no guarantee we have to go to 393, but it would not surprise me in the slightest, especially because price action is breaking down below 400, and we also do have this trend line that connects the lows from October and then again the lows from here in December, and there is the possibility that is also going to be support at 397. So yes, there is a lot of critical support between 397 and 393. And then if we lose all of that support, we are very likely getting a continuation of the bear market, which could at least take us back down to retest the lows of December and then possibly even the lows in October. But that is only going to be if we break down below 393, because that is going to tell us we're breaking back down below the 200 daily moving average, and that is more than likely going to be a sign that we're going back into the bear market. So just manage your risk around these critical support zones, and you can take long risk as long as we are above this level, but you need to instantly get risk off if we break down below support, just like when we first started to break down below the support at 407. You never know if these support levels are going to hold until price action proves it, and the only thing we've seen lately in the price action is a breaking of support up here at the critical support at 407 and then another break of support at 400. So you need to start treating this like a downtrend of lower highs and lower lows unless we start to get a positive bounce from support. Now, even though we went absolutely nowhere today, it was on very high volume, so there was a lot of buying and selling and ping-ponging around this support zone, which could be evidence that the market is trying to find balance around this price and we're due for a bounce. Jumping over to the NASDAQ 100 triple Qs, we were up 0.07% today, and again, it was on increasing volume from yesterday, but we still went absolutely nowhere, and we're still sitting on top of critical support at 294. Remember, this is a giant double bottom from 260 while we're above the neckline breakout at 294. So if you're going to take long risks, this is a very well-defined risk level to do so. If we break down below this, that means we're coming down to retest the 200 daily moving average at 290, and then below that, we're very likely closing the gap at 288, and then we will have contracting Bollinger Bands there, so we will likely have trouble going much lower than that. So pay attention to this critical support at 294, and if we start to bounce from it, we'll likely come back up to retest this resistance between 300 and the gap fill at 303. On the Dow Jones, we were down 0.22% today, and the Dow Jones got another daily close below the lower Bollinger Band as we are getting down towards this critical support zone at 327 while we're trading below 334. Now, 2 daily closes below the Bollinger Band in a row are a very good sign this is getting overextended to the downside. So there is still going to be a good chance we get a bounce before we go hit that support at 327, even if it's just a short-lived bounce. To get more bullish, we would need to break all the way back above this 20 daily moving average around 339 and then start breaking above these daily highs around 343, and then we could say we're breaking out of this bull flag, and that could send us into the 350s. If we break down below 327, we're breaking down out of the bull flag, and we're likely coming back down towards the 200 daily moving average at 323. On the Russell 2000 IWM ETF, we were up 0.27% today, and you could see we did get the second day in a row closing below that critical support at 188, which does tell us it could be now acting as resistance, which is obviously a bearish sign that we could be going lower. So in the small caps, you need to be risk off below 188, and then you can get instantly more risk on if we can break above 188, and then we still have critical resistance between 190 and 192. If we can break all of this resistance, that should be the green light to go long, and then we could start running back up towards 198 into the low 200s. If we continue lower, the next support to break is down here right around 186 to 185, and then below that support, we should go close the gap below 181. But again, these Bollinger Bands are way too contracted, which means we're not likely going straight down, so continue to expect a lot of volatility between this support and resistance. On the ARKK ETF, we were up 2.44%, and ARKK did get a bounce off of the retest of this breakout, and that could now be a support zone right around 39, but we need to break resistance at 40.4 and 41.6. If we get rejected from resistance, we're likely coming down towards 38, and then we will have the Bollinger Band, so we'll need to break down below 38 to start trending down towards 35 to 34, and that could be the start of another downtrend if we start losing this support at 39, because that will be a lower low after a lower high. On the VIX, we were down 2.62%, so we are seeing the VIX getting crushed from that overextended condition outside the upper Bollinger Band, but we still have the VIX elevated above 20, which is still a volatile market, which could mean we're still going to continue into this downtrend. In the short term, there's a good chance the VIX tries to close this gap right around 21.3, and you really shouldn't be getting overly bullish unless the VIX starts crushing back down below 20. On Bitcoin, we're currently trading around 24,150, and we are breaking down below that resistance at 24,500, but overall we still have the bull trend and we're still above the breakout level at 23,750. So overall, this is still a bull trend for a very risk on asset, which is telling us we're not seeing a lot of risk off sentiment in the market quite yet. We'll need to see Bitcoin collapsing and breaking down below this support trend line and losing this support zone between 21 to 22,000. So you can stay bullish as long as we're above the 20 daily moving average, which is currently at 23,300. On Amazon stock, we were up 1.28%, and Amazon is trying to bounce from this support zone right around 94, but we're still below all of the resistance at 98 and 102. If we can clear that resistance, we can instantly get a lot more bullish for a retest of the highs around 110 to 115. But if we break down through this support just below 94, we will be looking for the gap close at 90. On Microsoft stock, we were down 0.46% today, and Microsoft is at very critical support, which is this support zone between the support trend line at 250 and our support level at 252. If we lose that support, that's extremely bearish, and it means we could be coming down towards 242. But if we bounce from here, we will be looking for two gap fills at 256 and right around 262. On Nvidia stock, we were up 0.48% today, and Nvidia did get the second day in a row closing below the support breakdown at 213, but we did have earnings after the bell, and I am recording this after earnings, so we could see they did beat on revenue, which is always a good sign for tech companies, and currently it does look like Nvidia is going to try to gap up in the morning. So that will be bullish if Nvidia can gap up and reclaim that support at 213. That means we can fill the gap at 219 and then likely fill the gap just above 230. So it's going to be bullish while Nvidia is above 213. If the earnings is just a blow off and we see selling and we break back down below 213, then you need to watch this support right around 206, because below that we could be coming back down to 192. On Tesla stock, we were up 1.77%, and Tesla continues to see very high volume buying, and there is still a lot of short sellers in this stock, and we are currently bouncing off of the rising 20 daily moving average at 191. That 20 daily moving average continues to climb because it's a very positive slope, so it's going to support buyers now right here at 197, which is also a critical support. So you can stay bullish in Tesla above 190 and then again above 197, because above this we could retest the highs at 214 and possibly start running to our price target at 230. We have the negatively sloping 200 daily moving average right around 222, so watch that resistance as well. If we lose support at 197 and then the trend line at 190, then we'll be looking for a retest of the critical support zone at 183. On Apple stock, we were up 0.29% today, and Apple got the second day in a row closing below 150, so we do have this double top look, which could take us down to fill the gap around 146. We started to fill some of that gap today, but instantly found buyers at the 200 daily moving average, which is right around 147, so that is also going to be a critical support level. Watch for resistance at 150, and if we break back over 150, we can invalidate the double top and go back up towards a resistance at 156. On the financials, we were down 0.11%, and the financials have the second day in a row below the daily Bollinger Band, so there's a good chance we're going to see a dead cat bounce back up towards a resistance breakdown at 36. The industrials were down 0.25%, closing right on top of the support zone right around 100, and overall looking like a short-term downtrend. The healthcare sector was down 0.34%, breaking down below the support at 130 and at the bottom of the downtrending channel, so there's a good chance we could see a bounce back up towards 132 from here. The energy sector was down 0.67% today, closing down lower near our support at 82.6, and if we break that, the next target lower will be 80.5. So jumping back over the S&P 500, even though we went absolutely nowhere today, there was still a lot of important price action to pay attention to, and we do have some very critical support we need to see failing to get down for that next leg lower. The next leg lower, if we get it, will tell us whether or not we're going back into the bear market, and there is still the possibility the bulls rally from this support and still try to make another higher high on this daily chart, so you cannot rule out the bulls while we're sitting on top of critical support. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.